Alright, this is Ubaid on behalf of V Electronics, and in this video we'll be filling in our T4a. Okay, now your T4a is a bit different than your T4 slip. Your T4 slip may be from your employer. However, on the other side, your T4a is to be filled out by yourself in most cases. Okay, and your T4a has to do with benefits rather than employment income. Okay, so starting with the recipient number. Okay, this is 014 on your T4a. So we can go back to our TurboTax, okay, and check if we have this number over here, 014. Okay, unfortunately, we do not have this number. All right, and the reason why we don't have this number is because it has to be filled out by CRA only, or Canada Revenue Agency only. Okay, so if you look at the fillable T4a, okay, further down, okay, do not report on your tax return, CRA use only. This is box 14. This is your recipient number. Okay, now before we go ahead and fill in any of the other codes, let's go ahead and type in the payer's name. Okay, so let's say, for example, your payer's name in here would be your employer who's paying you the benefits, such as insurance benefits. Okay, so let's say your payer's name in this case is XYZ Transportation, okay, Incorporated. Okay, so this will be your payer's name. All right, now apart from that, you will also need to type in the year for your T4a. So if you're filing your tax return in 2025, this would be a T4a for 2024. Okay, so last year. So this will be 2024. Okay. Dental benefits. So payer offered dental benefits. So I was just talking about the insurance benefits. Okay, so if we go back to our presentation over here, 015 has to do with payer offered dental benefits. Okay, so for calendar year 2023 and after, if an amount is reported in box 16, your payer must indicate whether you or any of your family members were eligible on December 31st of that year to access any dental care insurance or coverage of dental services of any kind that they offer. Otherwise, box 15 is optional. Okay, these codes are reported to support the administration of the Canadian Dental Care Plan. Okay, now do not report this code on your income tax return. Okay, so if we go back to our fillable T4a, okay, and check the section that we checked earlier, okay, this is not for CRA. Okay, Canada Revenue Agency use only. Okay, so box 15 is not one of it. Okay, now if you're filling in by yourself, okay, this is not something that you should be concerned about. Okay, however, if your employer is filling in, okay, your T4a, for example, and is offering you benefits, okay, such as your dental care benefits as part of your group insurance plan, then your employer might have to fill in this box. Okay, so when it comes to this box over here, okay, box 15, okay, you have a bunch of codes. So 1, 2, 3, 4, 5. Okay, so you do have the option as an employer to choose one of the codes relevant to the dental care benefits. Okay, so we'll leave this one as it is for now. Okay, however, just for your information, this is for your employer or the payer. Okay. Apart from that, you have box 16. Okay, so again, this is employers and pension plan. Okay. Okay, so code 1, 2, 3, 4, 5. Okay. Number 1, no access to dental care insurance or coverage of dental services of any kind. Number 2, access to any dental care insurance or coverage of dental services of any kind for only the employee. Okay, number 3, access to any dental care insurance or coverage of dental services of any kind for employees, spouse, and dependents. Number 4, access to any dental care insurance or coverage of dental services of any kind for only the employee and their spouse. Number 5, access to any dental care insurance or coverage of dental services of any kind for only the employee and dependents. Okay, so again, you've got 5 options over here. 1, 2, 3, 4, 5. Okay, from 1 to 5, you've got 5 codes, and this is what these codes are all about. Okay, so what does it mean for the employers? So employers need to report on the T4 or T4a whether an employee, former employee, or a spouse of a deceased employee was eligible on December 31st of the reporting tax year to access dental insurance or dental coverage of any kind because of current or former employment. Okay, so again, this has to do with your dental care insurance plan or dental care plan, excuse me, okay, or CDCP, Canadian Dental Care Plan, if we talk about Canada. Okay, so when it comes to this box or this code, this has to be filled out, okay, by your employer. All right, now who is CDCP? Okay, or what is CDCP? This is a government program that provides dental benefits to eligible Canadians. Okay, to apply, you can go to canada.ca/dental. Okay. Next up, you have code 16. Okay, now this has to do with pension or superannuation. Okay, so when it comes to pension, you have number of options. You have the option to receive CPP, such as your Canada Pension Plan. Okay, you have the option to receive your old age security. You have the option to receive other pension benefits. Okay, so when it comes to pension benefits, okay, these are to be reported on box 16. Let's go back and check box 16 over here. So box 16, okay, this is pension or superannuation. So let's say you type in a figure for this box. Let's say this is $1,500. Okay. Okay, next up you have your box 18. Box 18 has to do with lump sum payments. Okay, so when it comes to lump sum payments, okay, this has to do with um, things like lump sum payments because of non-resident services. Okay, lump sum payments from a RPP or a registered pension plan. Lump sum payments accrued to December 31st, 1971. Okay, lump sum payments that you cannot transfer that are not reported elsewhere. Lump sum payments from a DPSP, this is your deferred profit sharing plan, that you can transfer. Lump sum payments from an unregistered plan. Cannot be more than the amount shown on their T4 slip and code 66. Okay, so lump sum payments that you cannot transfer, not reported elsewhere. Okay, this would be lump sum payments in a locked-in plan, such as your RSP, locked-in RSP. Okay, if you're not able to transfer your lump sum payment, okay, this would be an example of a locked-in plan. Okay, so that cannot be transferred. So you would need to type in any lump sum payments from your locked-in plan as well. Okay. So for example, RSPs, okay, RPPs are locked in, cannot be transferred before retirement. However, there are other circumstances where you can transfer or withdraw funds from locked in RPPs. Okay, withdrawals, you can't withdraw funds from an RPP before retirement, but you can apply for your pension when you reach retirement age. Okay, transfer, you can transfer pension credits between locked-in vehicles like another employer's pension plan, locked-in RSP, or LIRA. So LIRA is your life income retirement account. Okay. Vesting, most pension regulators allow you to vest immediately, meaning your contributions and your employer contributions belong to you. Okay, some legislation may require you to work for your employer for a certain amount of time before you vest. Okay, circumstances where you can withdraw funds. You may be able to withdraw funds if your employment with the pension plan provider ends. You may be able to withdraw funds if you experience financial hardship, so on and so forth. So this has to do with your locked-in plans. Okay, another locked-in plan would be LIRA, a locked-in retirement account. This is a type of RSP, so we talked about RSP earlier. Okay, that holds pension assets from a former employer. These LIRAs are designed to help people save for retirement by providing tax-deferred investment income. Okay, rules, locked in, tax-deferred, transfer funds, age to transfer, withdrawals. Okay, so what happens when you retire? You must turn your savings into retirement income. By the end of the year, you turn 71. All right, so that's another piece of information to help you fill in that box. Okay, so apart from that, you also have lump sum payments accrued to December 31st, 1971. Okay, so a taxpayer who receives a lump sum payment out of a pension fund or a DPSP, this is a deferred profit sharing plan. Okay, again, when it comes to deferred profit sharing plan, this is your employer, for example, offering you stock benefits. Okay, so for example, you have Amazon. Amazon might go ahead and offer you stock benefits as part of its DPSP. Okay, which basically means you as an employee are entitled to any profits made by Amazon. Okay, now of which they were contributed before 1972 can elect to exclude the amount accumulated on December 31st, 1971 from their income. In that case, a special averaging tax applies. Box 190, okay, lump sum payments from an unregistered plan. Now, what is an unregistered plan? Okay, so examples include but not limited to non-registered accounts, okay, unregistered securities, unregistered electronic plans, unregistered subdivisions, so on and so forth. So anything that's not registered. What's an example of a registered plan? You have RSPs, for example, that are registered. Okay, your RPPs are registered. Okay, so on and so forth. Okay, now again, okay, this all has to do with okay your lump sum payments or box 18. Okay, and this amount will be on line 13,000 of your return. So when they talk about line 13,000, this is your T1 general. So we go back to our T1 general over here. And we're looking for line 13,000. Okay, so this will be this line over here. Okay, just where it says other income. Okay, line 13,000. Okay, so other income will cover your lump sum payments. All right, so let's go ahead and fill in this amount as well, just to verify and double check. Okay, so lump sum payments, this is box 18. Okay, let's say box 18 over here, this will be, okay, $200. Okay, pension, let's keep it as 1,500. Okay, and payer offered dental benefits, we'll leave it as blank. Okay, save and close. Okay, so notice, okay, when you add all your lines, okay, line 21 is 1,700. Your total income is 1,700. Okay. Over here, lump sum payments, T4a, shows up as $200. Okay, however, okay, when you do the calculations, okay, your total will stay as zero. Okay. All right, so see attached schedule. So that was the schedule that we were looking at. All right, so apart from that, okay, lump sum payments, let's say box 18. Okay, this will be $200. Okay, box 20 is self-employed commissions. Okay, so we did talk about self-employment. Okay, certain types of occupations in T4 in the video that we made on T4. Okay, under other income. Okay, again, this has to do with self-employed commissions. Okay, so commission, okay, income that you earn from self-employment. Okay, so if you work for a company, okay, let's say a telecommunication company, and you earn commission on each sale that you make on top of your base income, this is not the commission that they're talking about. Okay, they're talking about a commission that you make as a self-employed individual. Okay, so if you have a transportation company, for example, somebody gives you some kind of tip or commission on top of what you earn as your base. Okay, that would be an example of commissions. Okay, so let's say self-employed commissions. Okay, or box 20. Let's say this is $300. So we go back to our T4A on the TurboTax. Okay, so TurboTax T4A. Okay, and this will be self-employed commissions, 100. Okay, or let's keep it the same as what we have over here, $300. Okay, save and close. All right. So this is a brand new return. Okay, as a result of which your tax refund is zero for the time being. Okay, however, once you type in your figures for your T4, your T2125, okay, you will see a difference in your tax refund for most of these codes on your T4A. Okay. Okay, so what is commission-based self-employment? You're normally required to work away from your employer's place of business. You were paid in whole or in part in commission or similar amounts. These payments were based on the volume of sales made or contracts negotiated. Okay, so if you have a merchandising business or a retail business and you sell, let's say, a bunch of products, okay, you have a shop in the mall and you're selling perfume or cologne. Okay, you have a shop in the mall and you're selling shoes. Now, if you're selling shoes, okay, usually they don't give you commission on top of each sale that you make, but let's say you do receive commission, okay, as a owner. Okay, so you're working for your own business and you receive commission for each sale that you make. Okay, in that case, you would type in that commission figure under box 20 or code 20. Okay, so you were paid in whole or in part by commissions or similar amounts. Okay, these payments were based on the volume of sales made or the contracts negotiated. Okay, so if you have a contract with your supplier, where supplier pays you a certain amount of commission, okay, if you do sell a certain number of shoes, for example, okay, then these are the commissions that you will need to type in box 20. Okay, Apart from that, you have box 22 or code 22, income tax deducted. Now, your income tax deducted would be the same kind of income tax deducted that you have for your T4 slip. Okay, however, for your T4 slip, your income tax deducted or your deductions are based off your employment income. Okay, for code 22, your income tax deducted on your T4a are based off your benefits. Okay, so say for example, you're receiving government benefits. Okay, so if you do get paid, okay, Canada Recovery Benefit, this has to do with COVID-19. Okay, government sponsored benefits. So government did pay a certain amount of money to individuals who were not working because of COVID-19. Okay. Okay, if you do have cash that you receive from Canada Recovery Benefit, then you might have income tax deduction on that slip as well. Okay, and this is the income tax. Okay, this is the deduction that you type in box 22. Okay, so let's go back over here. What have I to do? Okay, next up, okay, we'll go ahead and type in our income tax deducted, and this will be code 22. So let's say your income tax deducted, so it's roughly okay, $200, okay, for whatever amount of benefits that you receive. Okay, so let's say this is $200. Now again, okay, you will need to check your T4a slip on your Canada Revenue Agency account to see how much this figure might be, or you might need to use a calculator offered by CRA, Canada Revenue Agency, or any other source to figure out your income tax deducted for your T4a. Okay, just like the one that we use for our T4 slip. Okay, so income tax deducted, $200. We'll go ahead and type in this figure on TurboTax as well. So T4a, this will be $200. Okay, next up, you have annuities. Okay, now when it comes to annuities, okay, we're talking about annuity payments. Okay, so if you do have investment products, let's say you do invest in annuities. Okay, annuities is where okay you have a principal that you deposit in the plan and you receive monthly or yearly income. Okay, so the monthly income will have a certain amount of interest on top of the principal that you earn, okay, as part of the principal that you deposit into that plan. Okay, now you may earn this interest as well as the principal. Okay, you may receive your principal back. Okay, and you may earn this interest for the entirety of your life. Okay, however, unlike segregated funds and mutual funds, unfortunately, okay, you cannot transfer these benefits, okay, to somebody else if you pass away. Okay, usually if you do pass away, okay, your annuities end, okay, the day when you pass away. Okay, which means you do not receive those annuities anymore. Okay, so when it comes to annuities, box 24, this covers box 111 and box 115. Box 111 is your IAAC, which is income averaging annuity contracts, and box 115 is your DPSP annuity or installment payments. Okay, so IAAC, okay, this has to do with, okay, lump sum income. Okay, so the purpose of Section 61 was to permit individuals to spread certain unusual lump sum income receipts in equal portions over the current and future years through the purchase of a special type of annuity called IAAC. Okay, your income averaging annuity contract of an individual means a contract between the individual and a person licensed or otherwise authorized under the laws of Canada or a province to carry on in Canada. Okay, so apart from that, okay, we'll go ahead, okay, and type in a figure for annuity. So let's say you're receiving an annuity from, okay, whichever source. Okay, let's say you do have a principal that you deposited into one of these plans, and you're receiving principal and interest payments, okay, every month. So let's say your annuity is, okay, $1,600 for the entire year, for example. Okay, box 24 or code 24, we'll type in the same figure over here. Okay, let's say code 24 is $1,600. All right, now apart from that, code 28 has to do with other income. Okay, so just like we had other income on our T4 slip, okay, which covered income for hairdressers, taxi drivers, so on and so forth. Okay, this is code 28 on your T4a. All right, so this will be, okay, code 28 or other income. So this will be 1,000. Okay, say for example, you receive some kind of remuneration from the government, okay, for reduced daycare expenses. Okay, so this is something that you pay from your pocket as a parent, but the government gives you a discount, so to speak. So this is $1,000 of discount from the government, so to speak. Okay, you have code 30, okay, which has to do with patronage allocations. Okay, enter this amount on line 13,000. So we looked at line 13,000, okay, which had to do with income. Okay, do not report this amount if it was for goods and services you consume and cannot deduct the cost for when you calculate your income. The amount does not qualify for the federal dividend tax credit. Okay, so patronage allocation, what are these things? Okay, so patronage allocations or patronage payments, they have to do with certificates of indebtedness, amounts credited towards the balance a recipient can owe the payer of the patronage. Okay, shares of a corporation that an individual receives because of a patronage payment. Okay, so certificates of indebtedness. Okay, sort of like your promissory note. Okay, so when you do sign a promissory note, Okay, let's say you're buying and selling, or you're trading with somebody and you sign a promissory note saying that, hey, listen, I owe you this amount of money for the goods that I buy from you or for the services that I receive from you. Okay, that would be an example of a promissory note. Okay, now a certificate of indebtedness would be the same concept. Okay, where you're basically telling the other individual, or you're basically telling the government that you owe a certain person, let's say a private lender, a certain amount of money. Okay, so you have to apply a withholding tax of 15% on the value of patronage payments that a Canadian resident receives in this year. This withholding tax applies to the payment or to the total of several payments of more than $100 you made during the year. Okay, so patronage payments, they include the following: certificates of indebtedness, okay, amounts credited towards a balance a recipient can owe the payer of the patronage, okay, shares of a corporation that an individual receives because of a patronage payment. Okay, so again, this has to do with patronage allowances. Okay, certificate of indebtedness. We already talked about certificate of indebtedness. This is a document that shows that someone owes money to another person or organization. It's similar to a promissory note. Okay, this is a type of security, which is a guarantee that the debt will be repaid. Okay, what is it used for? Certificate of indebtedness is a form of obligation that can be issued by a government or corporation. It's similar in effect to a bond. It's a way to show that someone owes money and promises to pay it back with interest. Okay, what are some examples? You have debentures, treasury bills, and certificates of deposit. Okay, payments made towards a balance that the recipient owes, the payer of the patronage, shares of a corporation that the payer or receiver receives as a payment of the patronage. Okay, so we'll go ahead and type in an amount for box 30. Okay, let's say patronage allocation will be 100. Okay, so next up you have code 32. This is your registered pension plan contributions for past service. Okay, you will need to type in the amount you can deduct on line 20,700 of your return. For more information, see guide T4040, T4040. Okay, box 32 covers the following amounts: box 126, pre-1990, past service contributions while a contributor; box 162, pre-1990, past service contributions while not a contributor. Okay, so again, this has to do with your personal income tax return, which means you as a tax filer need to fill in this box or code. Okay, so anytime you have registered pension plan contributions. Now this has to do with past service, which means you used to work before. Okay, you no longer work now. Okay, however, when you used to work, you made contributions. Okay, to a pension plan. Okay, to a registered pension plan. Okay, so an example of a registered pension plan, again, this would be your RSP, for example. Okay, so on and so forth. Okay, so enter the amount you can deduct on line 2700 of your return. Okay, line 2700 on your TurboTax will be line 2700 on your T1 General. Okay, so further down, you have line 20. Okay. 2700, so 2700 over here. So RPP deduction, box 20 of all T4 slips and box 32 of all T4a slip. Okay, so whatever you type in, your box 20 for RPP deduction, and whatever you type in box 32 for your T4a. Okay, so enter the amount you can deduct on line 2700 of your return. You do have the option to validate this amount as well as the information on which this amount is based off using your guide T4040. Okay, box 32 includes the following amounts: box 126, pre-1990, past service contributions while a contributor; box 162, pre-1990, past service contributions while not a contributor. Okay, so past service contributions are amounts an employee contributes to a RPP for a period of service with an employer in an earlier year. These contributions can be made in a lump sum or installments. Okay, So past service contributions can include contributions to upgrade benefits for pensionable service in the past. Past service contributions can also include contributions made to specified multi-employer plan, SMEP. Past service contributions can be used to pay for past service benefits. Past service contributions can be made to an RPP directly or by transferring amounts from other registered plans. Okay, tax implications. Okay, past service contributions made before 1990 can be deducted from income up to $3,500 per year, minus other pension contributions. Okay, a past service contribution or past service pension adjustment (PSPA) is calculated when a member of a defined benefit (RPP) is credited with new or improved benefits for previous years. PSPA reduces the member's RSP contribution rule. Okay. So past service contributions, while not a contributor, okay, are contributions made to a RPP, for example, for a period of service before the employee was a contributor. Okay. Past service, a period of service with an employer before the employee became a pension participant. Past service contributions, amounts contributed for that period of service. Okay, tax deduction, the amount that can be claimed as a tax deduction from income for past service contributions is limited to $3,500 per year. Okay, how it works. Okay, the employee can make past service contributions in a lump sum or in installments. The employee can transfer funds from other registered plans to pay for past service benefits. Okay, so for past service contributions, okay, this will be, okay, box 32 or code 32, RPP contributions, registered pension plan contributions. So if you did work before a certain time period and you made contributions to your pension plan, this will be something that you will need to type in over here, code 32. Okay, let's say code 32 is 100. Okay, and we'll type in the same figure over here. Okay, this will be under other information. Okay, this will be $100. All right. Now, apart from that, you will also need to fill in your recipient's name and address. This will be the taxpayer or the tax filer. So let's say this is YZZ. Okay, XYZ. Make sure your first, middle, and last name, okay, matches the first, middle, and last name on your government photo ID, such as your driver's license. Okay, if you do have an initial, if you do have a middle name, you will need to type in that initial as well for your middle name. Okay, and you will need to type in your address. Okay, this will be your residential address in most cases. Okay, so let's say this is, okay, 3100 Andon Road. Okay, Ontario, L4L 4PA. Okay, so this will be past service contributions. Okay, further down. Okay. Pension adjustment, code 34. This amount is not an income or a deduction. Enter this amount on line 2600 of your return. Okay, so personal income tax. Okay, again, this has to be done by the tax filer. Okay, so PA. Okay, this shows up on line 2600 of your T1 general. So if you go back to line 2600, okay, this is this line over here, 2600 of your T1 general. This is your pension adjustment. Box 52 of all T4 slips and box 34 for all T4a slips. All right, so PA or pension adjustment is the value of benefits earned in a year from a RPP or deferred profit sharing plan, DPSP. It's reported on a T4 slip or a T4a slip. How is it reported? On a T4 slip, the PA is in box 52. On a T4a, the PA is in box 34. Okay. How does it affect RSPs? PA reduces the amount that can be contributed to an RSP in the following year. This is to make sure that people with RPPs don't save more tax-sheltered funds for retirement than those without. Okay, how can I find my PA? You can find your PA on your T4, T4a, or T10 slip. Okay, what if I forget to report my PA? If you forget to report your PA, you may have over contributed to your RSP. You can request an adjustment to your income tax and benefit return. Okay, so this is your PA. So we go back over here. Okay, this is your pension adjustment. Okay, and this will be box 34. So look for box 34. If you can't find box 34, okay, you will type in this box under other information. Okay, so 34, and let's say PA is a certain amount. Now this is a rough figure. Okay, pension adjustment is usually calculated using a calculator. Okay, however, for this video, okay, we will type in a rough figure. Let's say this is $100. Okay, apart from that, you have box 36 for the payer, such as your employer. This is your plan registration number. Okay, this is to be filled in by your employer. Okay, so this has to do with a group insurance plan, for example, and if there is a registration number, just like, okay, you have a registration number for your business, okay, you will need to type in this registration number as an employer in this box, code 36. Okay, code 37, advanced life deferred annuity purchase. This is an amount you transferred to purchase an advanced life deferred annuity, ALDA. Do not report the amount on your return and do not claim a deduction for the amount transferred. Okay, so code 37, okay, again, as you may notice, code 37 does not show up on the fillable T4a, okay, and if you scroll further down, look for code 37. Okay, this is something that's to be filled in by CRA, okay, Canada Revenue Agency. So box 37, advanced life deferred annuity purchase. Do not report on your tax return. Canada Revenue Agency use only. Okay. Okay, so overview, effective January 1st, 2020, the tax rules were amended to permit an ALDA to be a qualifying annuity purchase from certain registered plans. An ALDA is a life annuity where the annuity payment must be started before the end of the year in which you turn 85 years of age. Okay, code 37, we'll leave it blank. Okay, code 40, RESP accumulated income payments. Enter this amount on line 13,000 of your return and complete form T1172. Okay, so T1172. Okay, so box 40 includes the amounts from box 122, RESP accumulated income payments paid to other. Okay. So what is RESP? So RESP has to do with your education savings plan. Okay. Now, investment earnings in a RESP can be paid either to the subscriber or in some circumstances to a person other than the subscriber. Okay, these payments are called accumulated income payments, AIPs. Okay, the taxable amount can be reduced if both of the following conditions are met. A, the recipient of the AIP is the original subscriber. Okay, B, the recipient has filled out form T1171. Okay, if you're satisfied that these conditions and those explained on form T1171 are met, and you can reasonably believe that the recipient of the AIP will deduct the amount as an RSP contribution for the year you paid it, okay, you do not have to withhold any tax on the amount transferred. Okay, the taxable amount is AIP minus the reduction determined on form T1171. Okay, so again, this has to do with your registered education savings plan. You can find more information on Canada Revenue Agency's website. Okay, so you have your guide RC4092 to explain you what this is all about. So we go back over here and we check, okay, your T4a slip, and we're looking for box 40. Okay, so T4a, box 40. Okay, this will be this box over here. Okay, so let's say your RSP accumulated income, let's say this is 100. Okay, again, a rough figure. Okay, and when it comes to box 40, okay, this is something that you will need to fill in. Okay, report these amounts on your tax return as a taxpayer. Okay. Okay, so enter this amount on line 13,000, so that's your T1 general. Okay. Okay, and fill out the form T1172. Okay, so let's go ahead and move forward. Okay, just before we move forward, let's make sure that we have the same figure on our fillable T4a slip as well. Okay, so T4a slip. Okay, as you might notice, box 40 is not listed. Okay, which means that you will need to type in box 40 under other information. Okay, so box 40 will be 100. Okay, same figure as over here. Okay, further down you have a box 42. Okay, this is RESP Educational Assistance. Okay, so RESP Educational Assistance Payment. Enter this amount on line 13,000 of your return. For more information, okay, read RC4092. Okay, so what is a RESP plan? Okay, so RESP is a contract between individual, who's also called a subscriber, and the person, the promoter. Okay, under the contract, the subscriber names one or more beneficiaries, the future students, for example. So your subscriber might be your parents, for example, and agrees to make contributions for them. So just like you make contributions towards your pension plan, okay, this is a contribution towards your RESP for your kids, for example. Okay, and the promoter, let's say this is a bank, okay, or a lender, okay, agrees to pay educational assistance payments or EAPs to the beneficiaries. Okay, family plans are the only RESP that allow subscribers to name more than one beneficiary. Each beneficiary must be connected by blood relationship or adoption to each living subscriber, or have been so tied to a deceased original subscriber. So again, okay, we're talking about, okay, the person who is subscribing to the plan or subscriber and the promoter. Okay, so anytime you have RESP, you will have a subscriber and a promoter. Okay, payments from an RESP, the promoter can make the following types of payments: a refund of contributions to the subscriber or to the beneficiary, your EAP or educational assistance payments, okay, AIPs, accumulated income payments, okay, payment to a designated educational institution in Canada, okay, repayment of amounts under Canada Educational Savings Act or under a designated provincial program, okay, transfers to another RESP, so on and so forth. Okay, EAP, this is the amount paid to a beneficiary, a student from an RESP, to help finance the cost of post-secondary education. And EAP consists of Canada Education Savings Grant, the Canada Learning Bond, CLB, amounts paid under a designated provincial program, and the earnings on a money saved in the RESP. Okay, the promoter reports EAPs in box 42 of a T4a slip and sends only a copy to the student. The student includes the EAPs as income on their income tax and benefit return for the year the student received them. Okay, so code 46, this is charitable donations. Okay, so charitable donations. Okay, again, we left the other one blank. Okay, we're not going to type in RESP for the time being. But charitable donations, okay, this has to do with Schedule 9, donations and gifts. If you go back to TurboTax, you have Schedule 9. So anytime you make donations, okay, your donations are covered by your T4a. Okay, so charitable donations, allowable charitable donations, okay, so on and so forth. Okay, so donations made to a registered charity, okay, registered Canadian association, okay, registered journalism organizations, and registered housing corporation. Okay, so donations and gifts. This is Schedule 9. Okay, will show up on your TurboTax software as well. Okay, so under description, if you or your spouse or common law partner made a gift of money or other property to certain institutions, you may be able to claim federal and provincial or territorial non-refundable tax credits when you file your income tax and benefit return. Generally, you can claim part or all the eligible amount of your gifts up to the limit of 75% of your net income for the year. If you require information about a gift made in a previous year, you will need the version of Guide P113, Gifts and Income Tax. Okay, which donation can I claim? Okay, you can claim a tax credit based on the eligible amount of your gift to a qualified donee. A qualified donees are A, registered charities, B, registered journalism organization, C, registered Canadian amateur athletic associations, okay, D, registered National Arts Service organizations, okay, registered housing corporation resident in Canada set up only to provide low-cost housing for the aged, okay, registered municipalities in Canada, registered municipal or public bodies performing a function of government in Canada, United Nations and its agencies, universities outside Canada, student body of which ordinarily includes students from Canada, okay, so on and so forth. So these are donations that you can claim using your T4a, okay? So you do have a list of charities listed on Canada Revenue Agency's website. Okay, you will need to check that list as well as see if your charity matches any one of these categories. Okay. Eligible amount of the gift. In most cases, eligible amount of your gift is the amount shown on your charitable donation receipt. So if you do get a receipt from your charitable organization, okay, the amount on the receipt is the amount that you will type in. This is the eligible amount. Okay, however, in more technical terms, the eligible amount of gift is the amount by which the fair market value of the gifted property exceeds the amount of advantage. Okay, the advantage is generally the total value of any property, service, compensation, use, or any other benefit that you're entitled to as a partial consideration. Okay, in gratitude for or in any other way related to the gift. The advantage may be contingent or receivable in the future either to you or a person or partnership not dealing at arm's length with you. The advantage also includes any limited recourse debt, okay, including amounts owed by persons not dealing at arm's length in respect of the gift at the time it was made. Okay, for example, there may be a limited recourse debt that can reasonably relate to a gift to a qualified donee as part of gifting arrangement that is a tax shelter. Okay, so this will be code okay. Code 46. So let's say you have code 46 over here as $200. You'll type in the same code 46 on your T4a fillable slip. Okay, so code 46 is not listed over here, which means you will need to type in code 46 under other information. Okay, so 46. Okay, again, this will be $200. All right, now apart from that, you have okay, code 48. This has to do with fees for services. Okay, enter the amount shown in box 48 on the applicable self-employment line of your return. Okay, so when it comes to self-employment income, okay, what are we talking about? Okay, a business includes any one of the following: a profession, a calling, a trade, a manufacturer, an undertaking of any kind, an adventure. Okay, in the nature of trade. Okay, employment income is not business income. So basically anything else apart from employment income. All right, so Okay, we go back over here. Okay, fees for services. If you did charge any fees for self-employment, okay, you will need to type in those fees over here. So let's say $100, just a rough figure. Okay. Um, all right, so code 48, you will need to type in code 48, okay, on the fillable slip. So this will be $100 also. Okay, your RDSP, your Registered Disability Savings Plan. This is code 131. So RDSP, what is RDSP, Registered Disability Savings Plan? This is a savings plan intended to help an individual who is approved to receive the Disability Tax Credit, DTC, to save for their long-term financial security. Okay, contributions to an RDSP are not tax deductible, can be made until the end of the year in which the beneficiary turns 59. Okay, so RDSP, more information is on Canada Revenue Agency's website. Okay, you go back over here. So this has to do with disability savings. If you did save up for a potential disability in the future, okay, you will need to type in this figure over here. Okay, so again, this is for approved individuals. Okay, Registered Disability Savings Plan for approved individuals. All right. So to check for eligibility and contributions, again, you may access Canada Revenue Agency's website. Okay, so we'll leave this one blank as it is. Okay, RDSP. Okay, further down you have variable pension benefits. Okay, code 133. Okay, and this has to do with retirement option paid directly from a defined contribution pension plan. Okay, so you've got two kinds of plans when it comes to your employer. You have your defined benefit pension plan, DBPP, and your defined contribution pension plan. Okay, both are different types of plan in a sense that one of them offers, okay, both employer and employee contribution related benefits. Okay, the other one has to do with the employer only to some extent. Okay, so it is similar to a prescribed registered retirement income funds, which are available at most financial institutions. Okay, the PEPP variable pension benefit, VBP, provides members with flexibility and control over when and how much retirement income to withdraw and choice over how the money is invested with the plan. Investments grow on a tax sheltered basis. Okay, for this video, we'll leave this one as blank as well. Okay, premiums for private health services. This is code 135. Okay, so medical expenses that you can claim for this code, for this box. Okay, you can claim only eligible medical expenses on your tax return if you or your spouse or common law partner paid for the medical expenses in any 12-month period ending 2024 and did not claim them in 2023. Okay, generally, you can claim all amounts paid even if they were not paid in Canada. Okay, list of common medical expenses, types of medical expenses. Okay, if the expense is eligible, if you need any supporting documents. Okay, so again, a PHSP, when it comes to medical expenses, this has to do with private health services plan. Okay, so the PHSP does not have a set monthly premium, meaning there are no regular payments required. Instead, the employer contributes directly to eligible medical expenses incurred by employees, essentially acting as a tax-deductible benefit for both parties. Okay, key points about PHSP premiums: no regular premiums, employer contributions, tax benefits, so on and so forth. Okay, in Canada, premiums paid by a recipient for a private health services plan are considered medical expenses and can be claimed on a tax return. So if your employer, okay, is making these payments for your private health services plan, okay, you can now claim them. Okay, so you can only claim, okay, payments that you make from your own pocket. Okay, so if you do pay for medical expenses such as your dental care, okay, your your vision, your eyeglasses, your eye exams, okay, so on and so forth, then this is something that is considered a um, medical expense relevant to this code, okay, relevant to this box. Okay, so who can claim premiums? Employees can claim premiums paid to a PHSP on their income tax and benefit return. Okay, former or retired employees can claim premiums paid to a PHSP on their T4a slip. Okay, how to claim? Okay, on a T4 slip, include the amount paid on other information or paid in the other information area under code 85. Okay, on a T4a slip, include the amount paid in the other information area under code 135. Okay, so again, the other information code 135. So you will type in 135 over here, code 135, and you will say, hey, listen, I want to claim my dental care benefit. So dental care will be $200. Okay, so anytime you have eligible expenses, you're to list that expense, okay, over here for you to claim on your T4A. All right, so apart from that, you have code 136. Okay, so code 135, you said was 200. We'll type in that figure over here. Okay, code 136. Okay, this is basically for COVID-19. So code 136, this has to do with parents of murdered or missing children, parents of young victims of crime. Enter this amount on line 13,000 of your return. Okay, what are these benefits and what do these benefits offer? Okay, so the death or disappearance of a child is devastating, can leave parents unable to work. If you're a parent or legal guardian who consider to or have taken time away from work and suffered a loss of income to cope with the death or disappearance of your child or children, you may be eligible for federal income support. Okay, the benefit provides eligible parents with payments of $500 per week paid every 2 weeks for a maximum of 35 weeks over a period of 3 years. Okay, so these are benefits relevant to young victims of crime. Okay, so over here you will say, okay, so again, we're looking for code 136. Okay. All right, so 136 over here, amounts for victims of crime. Okay, so let's say this is, $300. Okay, and you will type in the same figure on your fillable T4A slip. Okay, so code 136 will be under other information, so code 136. This will be $300, for example. All right, now apart from that, okay, code 144 has to do with Indian Act, exempt income. Do not report this on your return. Okay, so this has to do with the reservations. Okay, code 146, same story. Code 148, Indian Act, lump sum payments. Okay, code 150, Labor Adjustment Benefits Act and Appropriation Acts. Okay, enter this amount on line 130, or 13,000 rather, excuse me. So the Labor Adjustment Benefits Act is a Canadian law that provides for payment of benefits to employees who have been laid off from their jobs. Essentially, it outlines a system for providing financial assistance to laid off workers. If you've been laid off, if you have been laid off for no fault of your own, okay, then you can claim your labor adjustment benefits. Okay, so purpose is to offer financial support to laid off employees during a period of unemployment. Okay, key feature allows the payment of benefits to eligible laid-off employees, which can include severance pay or other forms of financial assistance, depending on specific circumstances. Okay. So over here, okay, code 150. Okay, this will be code 150 over here. So code 150, this will be $200, okay, for example. Okay, again, code 150 under other information, this will be $200. All right, now, apart from that, you also have code 152. This is supplementary unemployment benefits plan. Okay, supplementary unemployment benefits plan is sometimes referred to as guaranteed annual wage plan. This is set up by your employer to top up your employment insurance benefits when you have a period of unemployment because of training, sickness, accident, or disability. Okay, code 154 has to do with cash award or prize from the payer. This is from the employer. Okay, so this could be a gift, an award, or prize. Okay, from a manufacturer, for example, or the employee of a dealer or dealership. Okay, so code 154. Okay, so let's say this is code 154. Okay, some kind of monetary award for good performance. Okay, so if you do have performance matrix, okay, set by your employer, and if you do follow those guidelines and earn your reputation, okay, in terms of performance matrix and um, in your company, in your um, place of work, okay, then you do have the option to basically type in the figure that you receive as an award from your employer. Okay, so apart from that, you have code 156. This is bankruptcy settlement. We'll leave this one blank as well. Okay, so anytime you receive some kind of compensation, okay, from a third party, okay, to pay your credit cards, to pay your line of credit, to pay your personal loan, okay, this would be an example of bankruptcy settlement. Okay, so a bankruptcy settlement is a legal process that allows an individual to discharge most of their debts. It can involve a consumer proposal, okay, or bankruptcy mediation. Okay, consumer proposal, a settlement for individuals who owe less than $250,000. Okay, a licensed insolvency trustee, LIT, negotiates with creditors and administers the proposal. The debtor pays the LIT, who then pays the creditors. Okay. Division 1 proposal, settlement for individuals who owe more than $250,000. A bankruptcy mediation. This is a process where a mediator helps the bankrupt and the creditors resolve their differences. Okay, bankruptcy, a legal process that can be voluntary, involuntary, or deemed. The debtor surrenders some assets and makes regulated payments. Okay, bankruptcy, this is a legal process by which you may be discharged from most of your debts. The purpose is to permit an honest but unfortunate debtor to obtain a discharge from most debts subject to reasonable conditions. Okay, these are three different ways to go in bankruptcy: voluntary assignment, involuntary assignment, deemed bankruptcy. Okay, so that has to do with bankruptcy. We'll leave that one blank as well. Code 158, this has to do with lump sum payments that you cannot transfer, that are not reported elsewhere. Okay, lump sum payments that are deposited in a locked-in plan. Okay. Code 162, pre-1990 past services contributions while not a contributor. This amount is already included in box 32. Okay. So any contributions made to a RPP before 1990 for employment or service before 1990. To be a contributor to a registered pension plan means you're an employee who actively puts money in a pension plan set up by your employer, which is registered with the government. Key points about RPPs: employer involvement, tax benefits, contribution types, retirement income. Okay, eligibility: the contributions must be for eligible service. Contributions must be made before January 1st, 1990. Okay, so on and so forth. Okay, code 180, lump sum payments from a deferred profit sharing plan that you cannot transfer. Okay, DPSP is a registered plan with Canada Revenue Agency that allows employers to share profits. The CRA regulate DPSPs to ensure they meet certain conditions. Okay, so again, this is Profit sharing by the employer. This is something that you report on your T4a, code 180. Okay, code 190, lump sum payments from an unregistered plan. Okay, this could be a bank savings account, okay, non-registered investment account with a brokerage firm, personal investment portfolio outside your RSP, or a non-registered savings plan, NRSP. Okay. Okay, PRPP, code 194. This is a pool registered pension plan. PRPP is a type of pension plan in which your contributions and your employer's contributions are deposited into an account in your name. Okay. Code 195 has to do with Indian Act. Okay. Okay, code 196, tuition assistance for adult basic education. Okay, so if you receive some kind of assistance from, let's say, OSAP, okay, this has to do with Ontario Student Assistance Program. This is something that you deal with when you enroll in a university or college program. And let's say your OSAP covers you for your tuition fees for the time that you're in college or university. Okay, then you would need to type in the amount that you receive from OSAP in code 196. Okay, so tax incentives, you can claim tuition cost as tax credits or deductions. Okay, grants and loans, you can apply for grants and loans from federal, state, and local governments. Okay, so on and so forth. Okay. Okay, next up you have code 197. This is CERB. Okay, these are COVID-19 benefits. Okay. So if you did receive COVID-19 benefits, okay, financial support to employed and self-employed would directly impact, well, affected rather, okay, by COVID-19. Okay, so applicants receive $2,000 for a 4-week period, same as $500 a week between March 15 and September 26, 2020. Okay, so this is something that was back in the past. Okay, if you did receive your CERB payments, you would need to type in the figure that you received for your CERB payments. Okay, CESB has to do with Canada Emergency Student Benefit. Okay, again, okay, this had to do with financial support to post-secondary students. Okay, and recent post-secondary and high school graduates who were unable to find work because of COVID-19. Okay, this one, code 199, has to do with CESB for students with disabilities. Okay, code 200, okay, provincial or territorial COVID-19 financial assistance payments. Code 201, repayment of COVID-19 financial assistance. Okay, so on and so forth. Okay, so COVID-19 benefits provided temporary income support to individuals who were directly affected by the pandemic. If you receive benefit payments that you were not eligible for, you will need to return the full amount you received. Okay, code 202, this is CRB. Okay, so CRB provided financial support to employed and self-employed Canadians who were directly affected by COVID-19 were not entitled to EI benefits. Okay. Depending on when you applied, applicants received either $1,000 or $600 for a 2-week period between September 27 and October 23rd. Okay, 2021. Canada Recovery Sickness Benefits, CRSB. Okay, this is income support to employed and self-employed individuals who are not able to work because they were sick or needed to self-isolate because of COVID-19. Okay, you would have received $500, $450 after taxes withheld for each 1-week period for up to a total of 6 weeks between September 27, 2020 and May 7, 2022. Okay, code 204, this is Canada Recovery Caregiving Benefits, CRCB. Okay, this gave income support to employed and self-employed individuals who were not able to work because they had to care for their child under 12 years old or a family member who needed supervised care. Okay, code 205, one-time payment for older seniors. Okay, this is financial support to a taxable payment of $500 to older seniors in August 2021. Okay, eligibility, you will receive the one-time payment if you were born on or before June 30th, 1947, and were eligible for old age security pension in June 2021. Okay, code 210 has to do with postdoctoral fellowship income. Okay, this has to do with an individual who has recently obtained his or her PhD, who is engaged in advanced research activities at a university or at a facility. Okay. All right. So apart from that, Code 211, Canada Worker Lockdown Benefit, CWLB. Okay, so this had to do with temporary income support to employed and self-employed people who could not work because of COVID-19 lockdown. Okay. All right, now apart from that, if you go back to your T4a fillable, okay, you have a place where the employer or the payer types in the 4 digits of the calendar year in which the employer made payment to the recipient. Okay, so let's say we typed in 2024. Okay, so this will be the year. Okay, enter your legal name. Okay, again, this is for the payer or the employer. Okay, legal name, operating or trading name, if it differs from your legal name. Okay, so this is your payer's name. You typed in XYZ Transportation Incorporated. Okay, recipient's name and address. Enter all in capital letters. The recipient's last name followed by first and initial. Okay, so last name, first and initial. Okay, home address, as I mentioned before, residential address, including province or territory, postal code, and country. A social insurance number, enter the SIN number provided by the recipient. Okay, so this is where you type in your SIN number. Okay, for privacy reasons, we will leave this one blank. All right, now this has to be done by the employer or the payer. Okay, code 13, recipient's program account number. Okay, so if your employer or business has a HST number, for example, or business registration number, okay, such as the one that starts with 81716, okay, something to that extent, okay, for a small business, ends with RT0001 or 2 or 3, whichever one, okay, this will be an example of a business number, okay. This is the same business number that the employer may use for claiming HST, okay, sales tax, okay, for or ITCs rather, okay, for any payments that the employer might have paid relevant to his or her business, okay, such as inventory or other expenses, okay. Again, payer offered dental benefits, okay, so we talked about these, okay, you've got 5 codes rather, okay. Okay, these are dental care insurance or coverage that an employer provides to their employees. This includes health spending accounts and co-paid dental benefits. Okay, what's included in the dental benefits? Routine checkups, fillings, major operations, preventative care, orthodontic treatments, and root canals. Okay, pension or superannuation. Okay, report the taxable portion of annuity payments you paid to an employee, retired employee, or survivor. Okay, or under superannuation or registered pension fund or plan using box 16. Okay, disability benefits, report disability benefits paid as a life annuity out of the superannuation. Okay, veterans benefits eligible for pension splitting. Okay, report the veterans benefits eligible for pension splitting. Unregistered pension plan, report superannuation or pension benefits you make periodic payments to a Canadian resident under an unregistered pension plan for services that the person rendered in a period throughout which the person did not reside in Canada using box 16. Okay, so this is all box 16 or code 16. First Nations exempt income, employee benefit plan, okay, retirement compensation arrangement. Okay, box 18, we talked about box 18. This had to do with lump sum payments. Okay, so single payments, report in box 18 the taxable portion of a single payment out of a pension fund or plan, including any single payment from a withdrawal from the plan, retirement from employment, or death of an employee or former employee. Okay, termination of, amendment to, or modification of the plan, okay, or reimbursement of any over contributions to the plan. Okay, so this is for code 18, okay? If for non-residents, report in box 18, amount paid for superannuation or pension benefits as a lump sum to a Canadian resident under an unregistered pension plan for services that the person rendered in a period throughout which the person did not reside in Canada. Okay, non-resident services, report in box 18, amount paid for superannuation or pension benefits as a lump sum to a Canadian resident under an unregistered pension plan for services that the person rendered in a period throughout which the person did not reside in Canada. Okay, you have DPSP, unregistered plan, so on and so forth. Okay, code 20, self-employed commissions. Okay, self-employed commissions are payments made to a self-employed individual based on the sales they make. Self-employed individuals can be sole proprietors, partners, or independent contractors. Okay. Okay, so these payments are not pensionable, insurable, or taxable. Do not deduct Canada Pension Plan contributions, employment insurance premiums, or income tax. Okay, what are taxable earnings? As an employer or a payer, you're required to deduct federal or provincial, territorial income tax from remuneration and other income that you pay. You need to determine which provincial or territorial income tax you're required to deduct based on the province of employment of the employee. Generally, you have to deduct income tax from salary, wages, commission, or other remuneration, including taxable benefits. Okay, code 24. Okay, this has to do with annuities. Code 28, other income. Okay. Code 30, patronage allocations. Code 32, okay, your registered pension plan contributions. Code 34, pension adjustment. Okay, what is pension adjustment? This is an individual's total pension credits for the year. PA reflects accumulation of benefits or level of savings in a year, okay, for a member because of his or her participation in one or more RPPs or DPSPs. Okay, individual's PA rather, okay, pension adjustment. An individual's PA in a year reduces the amount they can contribute to an RSP and PRPP in the next year. Okay, plan registration number. This is to be reported by your payer or employer. Okay, you have to report the plan number even if your plan requires only employer contributions. Okay, examples of plan registration numbers: Ontario Teachers Pension Plan. Okay, you got Public Service Pension Plan for employees, okay, of a certain organization, okay, Public Employees Pension Plan, so on and so forth. So you've got different numbers for different organizations and businesses. Okay, this is an example of a plan registration number. Okay, and again, this is a unique identifier for a pension plan. Okay, you can use this number to search for information about the plan, such as its effective date, fiscal year end, and plan type. So sort of like your policy number for your insurance policy. Okay, code 37, advanced life deferred annuity purchase. Code 40, RESP, accumulated income payments. Okay, accumulated AIP is a payment from a registered RESP that is not a refund of contributions or educational assistance payment. Code 42, this is RESP educational assistance payments. Okay, code 46, charitable donations. Okay, code 102, lump sum payments, non-resident services transferred under paragraph 60J. Okay, code 104, research grants. Code 105, scholarships, fellowships, bursaries, and project grants. Code 106, death benefits. Code 107, payments from a wage loss replacement plan. Code 108, lump sum payments from a RPP that you can't transfer. Code 109, periodic payments from an unregistered plan. Okay. Code 110, lump sum payments accrued to December 31st, 1971. So one-time payments that were made before December 31st, 1971 out of RPPs, your registered pension plan, or deferred profit sharing plan before December 31st, 1971. Okay, code 111, income averaging annuity contracts. So we talked about annuities. Okay. Okay, code 116, medical travel assistance. Okay. Code 117, loan benefits. So report the taxable loan benefit you provided to a person or partnership that was received as a shareholder. Okay, so loans and employee debt. Generally, if a low interest or interest-free loan is provided or a debt is incurred because of employment or shareholdings, the interest benefit is taxable. Depending on your situation, the interest benefit may not be taxable under CRA's administrative policy. Code 118, medical premium benefits. Report the premiums that you paid as a contribution to a provincial or territorial health services insurance plan on behalf of a former or retired employee. A medical premium is a regular premium payment made to an insurance company for healthcare coverage. Okay, how is it calculated? Risk, the risk the insurance company assumes, such as age, gender, and claim history. Coverage, the amount of coverage the policyholder chooses. Location, where the policyholder lives. Employer, the sector or industry of the employer. Okay, how premiums are paid. Workplace health benefits, individual health insurance, income tax. How premiums can be claimed, tax deduction. Okay, employees can claim premiums they pay on their income tax and benefit return, as well as subsidies. Okay, code 119, premiums paid to a group term life insurance plan. This is premiums that you pay to a group term life insurance plan on behalf of a former or retired employee. Code 122, this is RESP accumulated income payments. Code 123, payments from a revoked DPSP. Code 124, board and lodging at special work sites. Okay, code 125, disability benefits paid out of superannuation or pension plan. Okay, so disability benefits from superannuation in Canada include Canada Pension Plan, CPP, disability benefit, and CPP post-retirement disability benefit. These benefits are taxable monthly payments for people who have contributed to CPP and have a disability that prevents them from working. Okay, so to qualify for CPP disability, you must be under 65. Okay, to qualify for CPP post-retirement, you must be under 65 and already receiving CPP retirement pension. Okay, code 126, pre-1990 past service contributions while a contributor. Okay, so this has to do with service contributions that a contributor pays into a retirement plan for a specific period of service. Okay, code 127, veterans benefits. Okay, benefits in Canada include financial support, health care, and other services for veterans and their families. These benefits are available to current and former members of Canadian Armed Forces, CAF, and RCMP. Okay, code 128, veteran benefits eligible for pension splitting. Okay, pension split may increase the tax refund or reduce tax owing for the couple. Code 129, tax deferred cooperative share. Okay, this has to do with agricultural cooperatives to pay a patronage dividend in the form of additional shares. Okay, code 130, apprenticeship incentive grant for women or apprenticeship completion grant. Okay, so AIG. Code 131, this is RDSP. It's a savings plan intended to help an individual who is approved to receive the DTC to save for their long-term financial security. Okay, code 132, wage earner protection program. This is reporting payments you made for wages to workers of an employer who is bankrupt. Okay. Code 133, variable pension benefits. Okay, we talked about VBP. Code 134, TFSA, taxable amount or taxable first home savings account, FHSA. Okay, enter the taxable portion of amounts paid during the exempt period to a beneficiary who is a resident of Canada. Okay. So TFSA, this is an account where you deposit money, okay, without any tax implications, which means you don't have to pay taxes, okay, for the money that you have in your TFSA account. Okay, so contributions to a TFSA are not deductible for income tax purposes. Any amount contributed as well as any income earned in the account. Okay, for example, investment income and capital gains is generally tax-free even when it is withdrawn. Okay, now if you're not quite sure, okay, what your TFSA limit is, you may access your account online on cra.gc.ca okay, access your personal account and find out what your TFSA limit is as to how much you can contribute to your TFSA account. Okay, code 135, this is recipient paid premiums for private health services plan. Okay, so any premiums that the employee pays, the recipient as in the employee. Okay, the recipient as in the employee. Okay, private health services plan premiums. Okay, we talked about code 136, 146. Okay, so pension or superannuation. Okay, registered pension plan benefits. If you receive RPP benefits as a result of employment income, that was exempt from income tax. Okay, the RPP benefits will also be exempt from income tax. Okay, pension transfers from an RPP to an RSP or RIF. Okay, pension benefits on marriage breakdown, survivor pension benefits, so on and so forth. Code 148 Indian Act, lump sum payments. Code 150 Labor Adjustment Benefits Act. Code 152 SUBP qualified under Income Tax Act. Code 154 cash award or price from the payer. Code 156 bankruptcy settlement. Code 158 lump sum payments that you cannot transfer that are not reported elsewhere. Code 162 pre-1990 past service contributions while not a contributor. Code 180 lump sum payments from a deferred profit sharing plan that you cannot transfer. Code 190 lump sum payments from an unregistered plan. Okay, so payment of annuity payments or withdrawals from a pool registered PRPP using Code 194 and Box 24. Code 195 Indian Act. Code 196 Tuition Assistance for Adult Basic Education. Code 200 Provincial and Territorial COVID-19 Financial Assistance Payments. Okay, 201 Repayment of COVID-19 Financial Assistance. So report the amount of federal, provincial, or territorial financial assistance payments that were repaid in the year in respect of an overpayment of federal, provincial, or territorial COVID-19 financial assistance payments received in a prior year using Code 201. Okay. Code 205, we talked about Code 205, one-time payment for older seniors. Okay, Code 210, we talked about Code 210 as well. This had to do with individuals with PhDs. Okay, and that's about it when it comes to your T4a. Okay, and again, when it comes to your T4a, we'll do a T4a analysis in the next video. Okay, for the time being, since there is no T4 with deductions, okay, as well as no T2125 with credits, okay, we do not have much of a tax refund. The tax refund as of right now, just based on T4a, is $180. All right, so apart from that, this is Obaid on behalf of V Electronics. Have yourself a great day. So on and so forth.